Hello, everyone. Welcome to the Predictive Retention Campaigns webinar. Phone lines are muted, however, you can still ask questions. All questions will be addressed directly offline after the webinar. If you're interested in obtaining slides from this webinar, please reach out to one of our account directors. Their contact information will be provided at the end of the webinar. I'm now going to go ahead and turn things over to our first speaker, Michael Vermillion. Mike?
Yeah, thanks so much, Carolyn. Welcome, everybody. Thanks for joining us today. So I'm Michael Vermillion with JD Power. I lead the insurance practice here at the company. And with me today are Steve Crutzen, who's the senior director in our practice, and then Ken Lee, who's working with us as a consultant. Steve, maybe a quick introduction on your end, and then Ken, maybe a quick introduction from you.
Yeah, thanks, Mike. Great to be here with you and Ken today. I've spent most of my career, 25-year career now at JD Power, working with insurers, basically surveying consumers over the period to understand what motivates them around their auto insurance or homeowners insurance and other like life annuity products, and bring recommendations back to the industry on how to better serve a customer, and in doing so, grow their business. And of course, retention in the P&C space is a critical driver of growing the business. So happy to be here to talk about retention today.
Awesome. Hi, my name's Ken. I am a recovering academic. So I have about 15 years in the AI space, and I'm classically trained, however, as a behavioral scientist. I spent about 15 years, again, measuring, modeling, and predicting human behavior. So things like attrition. This is something that's really near and dear to my heart, something that I love to talk about, and happy to be here.
Yeah, we're happy to have both you join us today. So here's what we have in mind in terms of agenda for this webinar. So we want to kind of start off with the challenge and the opportunity, and then we want to kind of dive into this concept of predictive retention campaigns. We'll kind of explain what we mean by that, and then we'll kind of look at kind of how to actually practically apply the theory in terms of best practices from top performers, and then we'll kind of wrap it up with key takeaways. So let's start with the challenge. The U.S. property and casualty market is pretty large. So I think north of $800 billion a year in premiums. But the industry does have a pretty high switch rate. It's something in the order of 12%. So when you do the math, attrition is about a $100 billion a year problem for the industry. The question is, how can brands improve retention of their existing customer base, and maybe even more specifically, improve retention of your high customer lifetime value or CLV customers? So the way we think about the opportunity is focusing on retention as a path to growth. So one way to think about retention is that every dollar of account premium saved is actually a dollar of growth, because you don't have to replace that dollar before you start growing the business. And when you think about the required investment on a relative basis between retention of existing customers, upsell, cross-sell of existing accounts, and then going out and acquiring new customers, there's a dramatic difference in terms of scale between what it would cost to retain somebody, what it would cost to invest in meeting with a client to sell them additional products and services, and then going out and acquiring a new customer from scratch, which can be up to $1,000 in this industry. So it's a tremendous opportunity to focus on retention related to growth, and also things like reducing customer acquisition costs. We'll get to the ROI story a bit later. So we at JD Power have thought a lot about customer retention, and we've actually developed a playbook for customer retention for the P&C industry. And we've identified 13 strategies in total. We've kind of bucketed these between fundamental strategies, so what you're already likely doing, things like multi-policy discounts and bundling, loyalty and reward programs, and then a bucket, let's call them intermediate strategies. So what you should be implementing right now, things like proactive engagement, customer education and transparency, continuous value addition, and then some advanced strategies. So if you're not doing these today or implementing these today, things that you should at least be thinking about and testing. So things like hyper personalization of services. So what we're going to focus on today is one of these advanced strategies, and that's a predictive retention campaign. And by the way, if you want a copy of this JD Power playbook for retention, just hang on to the end of the webinar. We'll give you some more information on how to get a copy. So why don't we start off with the definition of what do we mean by predictive retention campaign? So what we're saying is, if you take your entire existing customer base, what if you could evaluate that base and actually identify the small percentage, let's say 5% of your existing base, that's going to be responsible for most of your attrition in the future, let's say 95%. Number one. And then number two, what if we could then match specific marketing messages that would resonate with that high risk group that would do the most to retain them? So we want to take the ocean of existing customers and really kind of boil it down to that smaller group that has very high attrition risk. The key questions you're going to answer for running a predictive retention campaign would be, number one, who should we be targeting? So that's that group of red from the large group of black. What is the messaging that you want to deliver to that group? How much should we be investing in this to get a good ROI? And then how do we know if we're successful? So those are all the questions you should be asking yourself when you're thinking about running a predictive retention campaign. So let's start with that first question, who do we target? So we want to target your customer base by quantifying something called propensity to switch. So you want to be looking at the high risk customers for attrition. And to do that, we're going to really want to understand what drives propensity to switch. So Ken, maybe if you could just provide your perspective as a data scientist, when you're looking at a customer's book of business and you're trying to identify who's got high attrition risk, what are the kind of things that you're looking at?
So for me, it's never just one factor. I think there's always been previously there's been a perception like, oh, we need to make sure we target these bundlers because they're the most important people. However, our model and our research shows that it's a combination of factors that kind of really tie in together that matter. So in our models, what we're able to do is identify who are the people that are most likely to switch using a number of different factors. So we use kind of our basic demographics. So like how old are you? How much education do you have? How many drivers do you have in your home? And then we couple that again with some behavioral information. So are you a bundler? What's your credit history look like? What's your driving history look like? And we have all these different components around kind of who you are, what you do, and combine those together, we can get a sense of, hey, why are you staying, or why this person may or may not leave.
Okay, thanks, Ken. Steve, from the kind of the business perspective, does that make sense?
Yeah, absolutely. I think in the industry, sometimes we do get too caught up on maybe a simplistic view of what's driving acquisition or what's driving, in this case, defection. But with our 20 plus years of looking at consumer behavior in this space, we definitely see what Ken is talking about in terms of multivariate models. Multiple factors are better at predicting who's going to leave, when they're going to leave, and why they're going to leave. So an important part is why they're leaving, so you can activate on a strategy to retain them if you wish to retain that policyholder.
Okay, thanks. So Ken, why don't we look at what like an example output might be from this kind of analysis? We're looking at clusters here, right?
Yeah. So we were with some data that we were able to get from a carrier. We're able to say we're able to kind of predict what's the probability of this person from a person's book of business or carrier's book of business of each person and their willingness or propensity to switch carriers, and basically rank them, and we put them into 5 different buckets. Going kind of from the 1 o'clock to the 4 o'clock direction is our first group, and these are the people that are very unlikely to switch. Um, these are the people that it's like they're very happy with where they are. Um, and then your second group from about 4 to almost 6:30 or so is your second group, which is they're more likely to switch, but they're still under average. We have our third group, which is our average group. This is from the 6:30 to about 8:30 or so, and this is about 20% of people within this carrier that have an average propensity to switch. Then going all the way to this red at the very top are the people that are most likely to attrit. So these are the people we've identified to have a 2x or greater chance of switching carriers or kind of leaving one carrier to go to another.
Yeah, so Ken, so obviously, if we wanted to really kind of narrow our focus and really target a group to pay attention to and run campaigns against, it would be that red group, right? That small percentage of people who are very high attrition risk, very most likely to result in most of the attrition that we're going to see over the next 90 days or even 12 months. But I think you recently had a conversation with a carrier who was kind of interested in that first group, right?
Yeah, yeah. There was another group where they were like, we want to make sure that this group, we keep them over time. We make sure that they're happy. Uh, this is a kind of prediction for a point in time metric. And if we're thinking about customer lifetime value, we want to make sure that these people don't switch from this first very light green all the way and in the next 6 months or so switch over into the red. So it's a really good understanding of who do we want to target right now as a high risk, and who do we like that are really good customer lifetime value people that we want to make sure that they're happy so they don't switch it and they don't move over time.
Yeah, so it's kind of a side benefit from doing this kind of quantification of attrition risk and not only identifying who's most likely to leave, but identifying who are the really loyal customers, because then that would kind of inform where you have probably good opportunity for selling in additional products and services and increasing customer lifetime value. So thanks for that. So that's the first question. Who do we target? Second question is, what do we say? So if we're going to run a retention campaign, what marketing messages are really going to resonate with those people to reduce their likelihood to leave and then increase their likelihood to renew? So Ken, how do we approach this? It looks like we're using clusters here again, right?
Yeah. So you can think about cluster analysis. Like if you go all the way back again to high school, who did you have lunch with, right? Did you sit with the jocks? Did you sit with the nerds? Did you sit with the ASB people? And these people, these groups have kind of shared characteristics. And those, the messaging that you target for one group is going to be very different than how you might target for a different group. So kind of taking it into the PMC perspective here, you can have two different people. For example, let's say one person is 30 single 30s, and you can have someone, let's say older 60s that are married. Those two people can have the exact same probability of switching, but you don't want to give the same exact messaging to both of them. You want to tailor it a certain way. So what we're able to do is kind of create these clusters of people that have shared characteristics, so you're able to target them a certain way with the right messaging that resonates with them specifically.
So what might be an example or two of a marketing message that would be specific to a particular customer?
So I don't want to get too much into like a very specific one, but a more general one could be, hey, this person had a policy change. Let's say their price increased, and therefore they had a bad service experience. So because you have kind of the history of what this person has done, because this is your book of business, you're able to get a sense for what events happened in the last year, and then target your messaging if you're an agent to say, hey, like, you had this experience 6 months ago, and inside I know, hey, this person's about to leave. Talk to them about that. Make sure that that isn't the main reason they're leaving. Understand what's happening, so you have at least a step ahead compared to completely getting in cold.
Okay. why don't we then kind of move on before we get into kind of an example of how you would bring this to life. We wanted to just add this additional thought around a pro tips associated with retention campaigns. And that's this idea that once you've assessed your book of business and you've assigned an attrition risk score to every single one of your customers, and you've kind of matched the key marketing message that would most likely resonate with that customer to get them to renew, this is information that should be loaded into your agent support system, so that your agents have access to this information where it's loaded right into the customer profile. So, Steve, any thoughts on this in terms of how this could potentially not only you can move this from retention campaigns to something you're actually working with on a daily basis in the interactions with existing customers?
Yeah, exactly. Whether you push it out through the agency support system or agency management system, or even in your own CRM for your call center folks, your
Mhm.
contact center folks, if that contact center person or the agent is better informed, they can be more proactive around when a customer calls in and they have a question around, let's say, their premium going up, and the agent or the CSR knows that this is a customer that's more likely to attrit due to premium concerns. They're likely going to have now tools to engage in a way that is more relevant to that customer at that time, and they could have had those tools set up proactively for them, right? So the carrier can inform when a customer is really sensitive to price and they're calling in about a premium increase. Here's how we can retain them. Having all that right in front of them on the screen versus trying to figure it out during the call and trying to figure out what to message to that customer makes that person far more effective at retaining the customer, whether that person's an agent, a CSR, or any other company rep. Having the information and being able to proactively act upon it makes them more effective at retaining customers.
Okay, thanks, Steve. All right, so let's talk about getting started. And the framework we want to use here is a 120-day pilot test. We think you need 120 days because retention and attrition is something that kind of slowly happens over time. And so this isn't something where you can run a test this week and see the results next week. You need a good chunk of time. Although so Ken, our thinking is that we can predict attrition risk even as soon as within the next 90 days, right?
Yes, our best models are the ones that have up to 90 days actually.
Okay, great. All right, so here's here's kind of the framework. You want to start with a model, so a retention risk model. You can build this yourself with your data science team. You can rent a model. So Steve and Ken and I have worked together to build a retention risk model using the industry data that we're collecting through our shopping intelligence. So we know who's switching to who. We know why they're switching, and so we've got like a lot of intelligence built into the model that we've developed. And so that model is then going to analyze your current customer base. It's going to identify the customers that have high attrition risk in the near term, even as soon as within the next 90 days. And then you want to use that same model to use the cluster analysis to identify the key retention messages. So once you've identified that group and you know what the messages are, you want to run a campaign. So you'll want to identify a test group. Our recommendation is you run more than one test at a time. So you may want to identify a couple test groups and then leave the rest of your customer base as the control group. Run those test campaigns using the key messages identified in the cluster analysis for about 90 days. And then at the end of the pilot, you can measure the retention of the test group or test groups compared to the control group. And with that, hopefully you've been successful and you can build a business case to run another pilot or to scale it. So Ken and Steve, I'd love to get your thoughts here in terms of the this kind of pilot framework. Ken, why don't we start with you?
Yeah, so for me, I love this second and third bit around multiple campaigns. What you can do is if you, let's say, set up 3 different campaigns, let's say test group A, test group B, test group C, you can not only compare against the control, but you can also compare against each other. So you can get a sense for which of these are the most important. or which of these are the most scalable. And then you can also kind of confirm that with your team to say, do you think this will scale? It is possible that, let's say, Group C has the biggest impact, but we don't think it's going to scale, let's say, to a different market. So it's really important to think about those results, compare them across each other, and then also test it kind of from an intuition perspective. And then as you're thinking about scaling, we're thinking about A/B tests for piloting. There's a whole different type of evaluation plan that you would use for a scaling methodology. And that goes from what we consider an A/B design to what I would use, which is like a wedge blot stratified random control sample. That's a very complex way of saying there's ways to do evaluations at scale to make sure that it works across a larger population, across a particular region, or even nationwide.
I just say in brief, from a business perspective, if you have the models, you go out to pilot, and now you've got real empirical evidence. You've been in the field, you've seen in real life how the models perform. It makes it easier to convince stakeholders internally to make business decisions as well. So if we saw that perhaps Model C outperformed on retention, but it was outperforming with customers maybe we don't want to retain. In fact, Model B is actually the better model, because even though it didn't, in this hypothetical case, didn't retain as many, it was really good at retaining the customers we want to retain. Learning that from a pilot can really convince your CFO to be willing to spend more on that future retention campaign.
Okay, thanks, guys. All right, let's spend a minute to talk about the business case and the ROI story for predictive retention campaigns. So we've got kind of some math on the left here in terms of an ROI calculation with the customer lifetime value and some assumptions around the cost of running a retention campaign, and then the math around if we see some reduction in churn, what the savings would be and the net ROI calculation. So I'm not going to walk you through the math, so I'll leave that to your own devices when you get the slides. But let's just kind of touch on these different parts of the ROI story. So if you're running predictive retention campaigns, one of the benefits from that is you're going to see higher retention rates. Obviously, that's the whole goal. We believe that you're going to see increased retention by at least 5 to 10%. That's really kind of depending on your baseline retention and the quality of your execution of the campaign. But if you kind of turn that on its head and think about it in terms of customer acquisition costs, you're actually going to lower your customer acquisition costs, because reducing churn means you need fewer resources to spend on replacing lost customers. So your overall customer acquisition cost comes down. Another benefit of retaining customers is just improved customer lifetime value. So by retaining those customers, you're going to get more revenue over their lifetime through renewals. That's going to give you more opportunity to do cross-sell, upsell. So you'll see a significant boost to CLV on average across your entire customer base. And then perhaps another way to think about this is the cost of not doing anything. If you don't implement a predictive retention effort or initiative or campaign, you're going to run the risk of losing not only your customers in general, but you're going to run the risk of losing your high value customers. So that's going to hurt your revenue. It's going to hurt your market share, perhaps even your brand reputation. So Steve, any other thoughts here in terms of the ROI story?
I just wanted to add on really quick, when we talk about lower customer acquisition costs, when you retain more of your book of business, you have more folks out there saying positive things around your brand. And of course, that's
Right.
a tailwind to your acquisition as well. So in our space here in P&C insurance, and all the work we've done over the last 20 years on shopping, we know that testimonials, recommendations from friends, family, colleagues are really important drivers to who a customer, when they're out shopping, decides to get a quote from, and ultimately who they buy from. So the better you're doing at retaining, the more likely you're going to have customers out there saying great things about your brand.
All right, let's just recap then what we talked about today. So we know attrition for the P&C industry is a very large problem, but it's also a large opportunity. We just want to go back to that thing we started at the beginning, with this idea that if you're focused on growth, this is really kind of job one or step one is reducing attrition. So it's that metaphor. If you're in a hole, the first thing you have to do is stop digging. So it's kind of the same idea. Running a predictive retention campaign is just more effective and focused than what we call spreading peanut butter, which would be if you're running retention efforts across your entire customer base, you're spending just a little bit of money across a large population. It's going to be more effective use of funds to focus and target first before you run your retention initiatives. To get at getting one of these things off the ground, you have to leverage what you know about your customers so that you can quantify that attrition risk and then match the key retention messages. And then just getting started with an honest internal conversation with your organization. So here are some questions you can ask. Number one, do we have an effective attrition management program? Have we really kind of segmented and identified the customers with the highest attrition risk? Do we know what retention messages will resonate with that group? And then what can we learn from best practices? So Ken and Steve, thanks so much for joining us today. And we want to thank everybody for joining this webinar. I'm going to hand it over to Carolyn to give you some instructions in terms of where to find more information and next steps.
Thanks, Mike. And thank you everyone for joining us. If you do have any additional questions or would like to discuss this topic further, please don't hesitate to reach out to our team. And if you're interested in obtaining slides from this webinar, you can reach out to one of the account representatives on this slide. Their contact information is provided. We also invite you to visit our website for more information about our insurance intelligence solutions and join our mailing list for more content like this. Our mailing list subscribers will get early access to our upcoming retention playbook that Mike introduced earlier in this webinar, so make sure that you sign up today. Thank you again, and we look forward to connecting with you soon.